Welcome to the latest Motley Fool Scoreboard. I'm on in Chalk Blue, and we've got longtime fools Jason Hall and Matt Frankel giving a 1 to 10 rating to a pioneer in online banking. Axos Financial, ticker symbol AX. Talk about the strength of its business first, including factors like the very competitive industry and its competition. Or, I guess, both the same thing. A 10 is invincible. A 1 is hopeless. Matt's at a 7. Jason's at an 8.
So I think a little bit of the difference between mine and Matt's score is just thinking about banks themselves, and it's a cyclical, risky, leveraged industry broadly. But I gave Axos an 8 because what Greg Garabrandt and his team have done to steadily make it more diversified and lower risk, expanding it beyond consumer banking into commercial banking, growing a security services business, a lot of fees-based business that have lowered the risk and made it a safer business while continuing to accumulate market share and grow over the long term. And there's not a lot of banks that can thrive across economic environments. And this is one that's built to be able to do that.
Yeah, you're absolutely right. Online banking, it's a tough business. There's a lot of competition. And honestly, I really can't see giving any bank a score higher than like 7 in terms of business right now. It's a very cyclical business. There's a lot of uncertainty in the market right now. A lot of recession risk in the economy right now, and Axos is vulnerable to things like recessions and changing consumer spending preferences, things like that. The company is growing fast. There's no denying the numbers. It has excellent margins, and I mean, any major bank would be jealous of their net interest margin, and it's done a great job in a tough environment.
Let's move on to management. A 10 is Warren Buffett. A 1 is Homer Simpson. Matt's at an 8. Jason, once again, is a little higher at a 9.
Yeah, I really think Greg Garabrandt is going to be one of those rare leaders that you see people getting PhDs that are going to be writing case studies about him. He took over back when Axos was B of I Holdings, Bank of Internet, basically just a big jumbo mortgage lender with massive exposure to Southern California. He took over in October 2007. If you don't remember, that was the peak before the global financial crisis. His first year and a half on the job, the global banking system was on the verge of collapse and the stock fell 55%. Today, it's a vastly stronger, more diversified business like I talked about. That bet the board made on a young guy without tons of experience leading a bank has really paid off. The stock's been a 36-bagger under his leadership, and I think it's going to continue to beat the market. This is one of the 10 best CEOs in banking.
Yeah, and it's not just like the stock soared in the early days or this was like a financial crisis recovery. It really has been kind of a long-tailed streak of outperformance. He's done a great job of leading the business through all different types of market environments. He's beaten the S&P, the overall banking sector in recent years. Not many banks have beaten the S&P if you look back like the past 3 years and include that 2022 bear market. I wish they would do a better job of technology. And I've said jokingly to Jason that this is an online bank that's not great at online banking, but
it's true.
But the more accurate way to say that is they've fallen behind the curve. Their technology was state of the art 10 years ago, but they've kind of fallen behind the curve. There's so much competition, so I wish they would do a better job of investing in technology and building out like more of an ecosystem and being like a bank replacement.
It's a pre-Venmo company, right? Kind of. This is kind of or yeah. Anyway, let's move on to financials. A 10 is a fortress. A 1 is yikes. Jason's at a 9, and Matt, you're at an 8.
I feel like you can just take all of Jason's scores here and subtract 1, and you'll arrive at my scores. So fantastic revenue growth. Like I said, the numbers don't lie. Regardless of my feelings about their technology or how they handle online banking, the numbers tell the story. Net interest margins almost 5%, which most big banks are in like the mid 2s. It's one of the best in the industry. They've done a great job of managing expenses lately. Deposits have continued to grow, by like 6% year over year in a really tough environment for banking growth. And they grew book value by 21% over the past year. So I really can't make a bad argument that financially it's not a great company.
Yeah, we're just to kind of quantify the quality of the bank. It has consistently outperforms more than 90% of other banks in terms of returns. The structure of its deposits and other capital sources supports the way that it lends, and its loan book is very safe. Matt's talked about that a little bit, but some of the loan to values that they consistently have creates a substantial market or a margin of safety if we do go through an economic period where people are having to make the hard decisions about what debts they can service. The fees-based business has grown. It's steady and profitable. The balance sheet, we talked about the strength that they have. I do think they're positioned, even during downturns where the results may decline, they can accumulate market share because they have a strong balance sheet. When other banks might be scrambling just to make sure they don't collapse, they're going to be on the hunt for opportunities.
Matt, let's move on to valuation. How well will Axos' stock do over the next 5 years? How safe is it? 10's a sure thing, 1's a lottery ticket.
Yeah, I said in the 5 to 10% range is what I'm expecting over the next 5 years, probably toward the higher end of that range. Safety score of 7, just like kind of the business quality. It's really tough for me to give any bank higher than a 7 for safety right now, just given the general economic uncertainty. As rock solid as any bank is, you really can't make the case that it's not vulnerable to things like interest rates and recessions and things like that. The company's high margin and relatively safe loan portfolio, it's great asset quality, should help it through any turbulent times. But I'd say, really, if I had to put a number on it, like 8 to 9% is what I would expect for returns.
Yeah, I agree completely, Matt, on the safety score. Came in as a 7. And again, grading on a curve of the industry, that's a really safe bank, I think is the key. For returns, I'm looking more 10 to 15%. I think we have a couple of reasons. There's a lot of uncertainty right now, near-term concerns, but the valuation, when you bolt it on how great of a bank this is, how well run it is, with a relatively young CEO, he's been there a long time, but he's still in his early 50s, 1.5 times book value, less than 9 times earnings. Just looking over the past decade, again, not going cherry picking from the bottom of the financial crisis, just the past decade, earnings per share is up 500%, book value per share is up 450%, and you can buy it for under 9 times earnings today. Long-term investors, I think the higher end of 10 to 15%.
So they're impressive numbers. Let's move on to top it. Matt, is there a company in Axos' space you like more? I'm guessing there is.
There is. It's SoFi. I really like the all-in-one bank replacement strategy. Axos, I mean, Jason loves this stock, but it's not a bank replacement. It's not. It can't really take the place of like your Wells Fargo or your Bank of America or anything like that. I like that. The bank replacement goal, they've executed tremendously. And by the way, SoFi got its banking charter in 2022 and has since grown its deposit base above where Axos is. So really impressive ramp up of their bank.
Yeah, I always have to look at caution when banks grow that quickly, though, because it's easy to grow a bank that quickly. All you have to do is back off on your underwriting a little bit and be a little bit less conservative. I don't think that's happening with SoFi. I love SoFi, and I struggled with not agreeing and saying also SoFi, but thinking about what Axos has proven over the past 15 years, I think I prefer Axos right now, particularly at the valuation.
Thank you to both Jason and to Matt. They've given Axos a strong overall score of 7.6 out of 10. Would have gotten an 8 if it was just Jason. But it's in line with, they did it about a year ago, and they got a 7.7. Now it's 7.6, pretty much the same score. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Ryman Hospitality. Till then, Fool on.
Axos, the online bank that's bad at online banking.
That's right.